Alright, so in this video we're going to talk about the inducement strategy. What is the inducement and how to use it in your trading. Alright, so first and foremost, I'm pretty sure a lot of you have heard or understood and have seen how to use inducements. We like to use it in this fashion, okay? And it's essentially it's a strategy that you're able to actually enter off from. So this can also be applied for entries, for structure, okay? And so here it goes. So essentially this is the way we see inducement. When prices are going higher highs like this, right? And when price breaks a high, okay, actually this is a bad example, let me just show you this way. Prices are going higher high, right? Going bearish, right? Doing this, right? Retracing. Then now prices are extending, right? And they're breaking above the next previous high, right? The old high right there. So what we wait for is essentially for price to come back right over here below a low. Right here would be that low, okay? So, and wait for prices to come and mitigate the demand zone, and then we wait for prices to push bullish, okay? I don't know if you guys see this a lot of the times, but we do in our charts, obviously. But this is one of the simplest ways you can find inducement. So this little low right here is considered to be the inducement in the markets, okay? So what I like doing is first is looking at a high being broken, okay? And then what I ask myself is which low, since we're bullish, I'm asking myself which low caused the break of the structure of this high, right? It would be this low right here. And so what you want to do is wait for prices to retrace, sweep that low, right? Most likely fill in the imbalance, because there's going to be some imbalance in there, okay? FFG, fair value gap imbalance, right? All the same thing, right? And then come into your demand zone here and then look to buy, okay? That's the simple strategy, and as simple as it gets, okay? It's very easy, because the way I started was trading was actually seeing it this way, and I've been getting a lot of good profitable trades on this strategy, and I still use it, but I use a lot of swing highs and swing lows in this case. But anyway, without getting too far away from what I'm trying to tell you guys, this is how it all looks, okay? So I'm going to show you guys on the live chart right now, and show you guys how this works on the live chart example, okay? Also, if you want to see on the bearish side of things, right, it's very easy. You're just, it's bearish, right? Goes like this, retracement. Then you wait for price to break that low, right? Then you ask yourself, which high caused the break of the structure? It was this high, right? Price will take out this high, right? Mitigate this supply zone, and then continue bearish. So you're actually seeing this is your supply zone here, okay, like that. You're seeing this high in here as your inducement. It's very straightforward, very simple. I don't know if anybody's gonna get mixed up with this, but this is how we see it, right? And then here would most likely just be a fair value gap, right? And that's it. That's all the rules, right? You're just waiting for a clean break of structure, wait for the high to be swept, right? Since we're bearish, okay? And the way to use this strategy simply is to use it on a trend basis, okay? Don't use it if prices are consolidating. Don't use it for whatever other purposes other than price trending bullish or bearish, okay? And that's all. So I'm going to delete all this right here, and we're going to go straight to the live chart examples right here, so I can show you guys how it works and how you guys can see it, okay? So let's look at this, for example. Let's just even look at this right now. You can see here, all right, we had a clean break structure right here. Oh, excuse me, there's a low, there's a high, there's a run right there, okay? So you can see it right there. There's your high, right? You guys can all see that. I'm going to zoom in here for you guys to see. All right. So you ask yourself, which low caused this break of structure? It was this low, right? Right over here. Right there. So this low caused that break of structure, right? Then you can look at this whole entire area. Now this one didn't fully mitigate, which is okay, because at times price doesn't fully mitigate the order block, okay? it's about a 50% there. So this is your fair value gap right there, right? And this is why sometimes what I do is I place that, I mark that out as the inducement, right? Just like that. Once the inducement is taken out, I can either, whatever your risk to reward is, right, however many pips you like to risk here, right? I'm obviously in the 30-minute. I'm just showing you guys this on the 30-minute, obviously, right? And you can either just enter immediately as soon as the inducement is taken, because price has a 50-50 chance either of filling the fair value gap or mitigating the whole entire order block, right? Just like that, right? So, and then you can obviously either, you know, risk the whole entire zone here, or maybe just do about 50% of the zone, right? Something like that. And maybe something even like this, right? So take the first 50, for example, right? The open right over here. All right, so when price closes here at that area here, at this at the zone, at the top of the zone, or inside the fair value gap, this is essentially where you want to be entering, right? I would prefer for price to come here below the 50. However, it's a 50-50 chance all the time, right? Because the market is never 100% correct, right? So that's one way to see it, right? There we go. So that's the first example, right? You can see it in, again, so many ways. Let's go, let's go right over here, maybe you see some here. Okay, like right here, for example. All right, you can see that there's a break of structure right here, right? You can see, you can ask yourself which high caused the break of structure. It is this low, right here. And there's your BOS, there's your inducement, right there, right? And obviously I'm on a 30-minute time frame, so you can use this whole entire area now, right? You can use this candle here, probably, right there, okay? And what I typically like seeing, obviously, is a fair value gap, and then a high that needs to be mitigated, whether it be this high, right, or maybe this entire area here, this entire zone, right? Because prices can come prices can come deep, right, about 50% of the way, right? So you can see again, you got to ask yourself, which high, right? Was it this high, or this high that caused that break of structure, right? It's the first high, the high here that caused that break, right? The nearest high, not the last high, or the the second high from the back, but it's this one, right? Boom, boom, right? Right, and you'd be able to profit from all of this like this, right? So obviously, again, we're trending, we're going bearish. That's why we're only going to look for sells. We're trending bullish here. That's why we're only going to be looking for buys, right? And obviously, these are huge moves. You can always be profiting from these if you do it correctly. If you're only looking for trend trading opportunities, okay? Let's look over here. You can see here there is another break of structure, right? I got to ask yourself again, which high caused this break of structure? It was this high right here, right? So that will be the inducement for us right here, right there, right? You're gonna go look above and go to the nearest high, whether it be this one or this one. It doesn't really matter. This to me, I see this as a whole area, a whole zone, right? So again, I'll go from this high to this low, right? Split it about 50% of the way. Oop, let me cover that inducement, right? Either catch it at the 50 or catch it at the very top, right? Of course, there's some ways, there's some things you can do where you can say, let's just say you want to catch the, the area here, the open, right? At this, at the very low of the zone, right? And then just cover your 50 like this too. That's another way you can do it, right? But this all depends on your risk to reward, right? Is my risk to reward worth it, right? So go back here, right? Something like this, right? This would be what, about a 2 almost a 3%, depending on how you like to, on what you like to risk. Maybe you like to risk all this, right? 1 to 2, right? Something like this, right? Very easy to see these kind of things, right? With the inducements. Let me show you a few more examples. let's go right over here. There's your break. All right. There's your break. Go. Now you gotta ask yourself, which high? Which high was it? This high, or this high that broke the low? It was the nearest high, right here. Right. Okay, in some cases this is interesting, because this is a wick here, right? There's most likely prices above this wick. Watch this. See that? So you're gonna have to also look at these kind of things too, where if it's a wick, if it shows a wick on the left side, right? You can see that the body closed above the wick. So this is valid for me. I can still trade this, right? If you see the wick. In my case, I would like to see if this was a wick here, I would like to cover the wicks like this, right? Now I have this whole zone to play, right? Then I can now split this 50-50, right? Do something like that. Enter here. Go right above, maybe cover the 50. Oops, cover the 50 just by a bit, right? And then target the next low, like this. Something like this, right? This would be a 4.9%. Right, there you go, guys. Right, it's very simple and very straightforward. I hope you guys are understanding this and seeing how simple it is. You don't have to make it so complex, right? Again, just want to stress this out, that you need to only use this for trend trading purposes. Nothing else. Nothing else from there. Like for example, here you can see there's a high, there's a low, right? And prices are starting to consolidate here. So there's no way in the world I'm going to be looking for, entries from here. Trying to look to entry from here, because that's a high here. This high causes break. Therefore, I'm not going to go up here and say, okay, I'm going to be entering there, right? Because this makes no sense. You need the high to break the low, or the low to break the high. Okay, so let's just say, for example, here you can see this demand was respected, right? We're going to look at buys now because the demand was respected. And when you go look over here, let's see where the structure would be. If I can look for this, okay, there we go. Right there. Excuse me, that's not it. Right there. What am I doing? Let me look at the. There we go. That's much better. Okay, this would be something like this. Okay, and if we span that across. Okay, this hasn't yet actually. But if you do this, if you do it this way with the line chart, you can obviously get a little better by just saying, okay, I want to play with the bodies instead of the wicks, right? So you can see that this was a break of structure. Price comes right back below. There's your inducement, right? The low that caused the break. You go right below it there and go for the entry, right? So this low here was the one that caused the break of the structure. Your inducements here, prices run up. Right. This one is not as smooth, obviously. It's not the best. It's not the best example, right? Let's continue. Right over here. Okay, here's an interesting one here. There's the break of structure, right? We're looking for sells, obviously, because everything is bearish. Okay, you're only looking for a high. What is this right here? That's a high, right? Span that across. Notice how there's a wick right there, right? There's some sort of imbalance, and then there's your order block. So your order block is not too far away from your inducement, right? There's your entry, right? You can enter there and short it, right? And you would only do however much risk the zone usually says. So I would do, at least this, because this is obviously relatively small. It's not big. If it was big, I'd cut it about 50%, right? So this would be about what, 10.7% for this, right? Just like that. If we're going bearish here, right? Here's your break. You can see here, the inducement has not been taken out until we get back here, right? So there's your break. Inducement was not taken, but all this liquidity was created in here. But there's your entry right there, right? Here's your inducement. I would span that across, just like that, and wait for price to get there. And when it does, I'm selling. See that? Just like that. Okay, I'm going to show you one more example, guys, because I think you guys got it already. It's already straightforward here, right? All right, so here is another break of structure. Okay. And again, go and ask yourself, where's the previous high that caused the break of the structure, right? It was this, right? So this is internal here. This is kind of interesting because there's two types of structures happening here. There's the substructure and the sub and minor structure and the microstructure. So when there's a break, here's our micro. You can see that this was the high here that caused the break, right? Caused the break of structure. Price came back up, right? There's imbalance in here, and there's your order block, right? Normally, like I said again, I cover the whole entire thing just to be sure, right? Because there's no 100% of way of saying this is the exact entry, you know, that you're going to be entering from, right? You can split this about 50-50, right? Target the next low for a 4.3%, right? And then here, if you look at above again, if you look at this high here, right, that is our inducement from here, right? Because you can see this is a big wick, which means the body closed here, not here, which means the body, look at this, how we're higher than the previous body here, right? So this is still an entry from above. So you can play it in multiple ways this way. Okay, you can see how, again, I'm counting this as a inducement. Right there is inducement. I span that across, I wait for price to get there. That's it. I don't care for anything else. I just wait for price to get there. Right? If it doesn't give me what I want and price breaks a new low, then I get ready for the next one. Right? I get ready for the next one to do the same thing. Right? But it has to be trending, guys. If it doesn't, then this won't work out. Right? You know, and sometimes price doesn't give you what you want, right? Because nothing is always 100%. Like right here, for example, there's a break, right? This is kind of what I was just talking about right now, right? There's your high, there's your inducement, right there. There's your inducement. Price never reaches, right? However, price broke a new low now, and I will follow the inducement. I will still wait for it, right? So just because it didn't give me here, I'm not going to just sit and cry and just be like, oh, this didn't work out, you know, Royal Blu FX. Excuse me. That was terrible. Royal Blu FX is terrible. Excuse me. I'm not going to say that, you know, I don't want to, people say, oh, Royal Blu FX is wrong, you know, he's wrong about this. No, it just doesn't, market doesn't always give you what you want sometimes, you know. Same thing over here. Right, there's a break, price never reaches the inducement, right? There's your high right here because that was the high that broke that low, right? But if you look at it in this perspective, and mind you guys, structure in the market is just perspective in everything, right? There's a break right there. Okay, let's ask ourselves, which high caused the break of this low, right? So go here, put your cursor here and follow all the way up. Right? That was the high. That's where the high started. I would span that across. Look at the nearest order block. Okay? It would be this. Right there. There's your candle, their wick, right? Right there, right? And just enter. Right? You can always leave a little room for risk, whatever, but I'm telling you guys, if you practice this and you see how this works in this way, you're gonna catch constant entries this way. You know, it's more so just to be patient, you know, nonchalant kind of trading. You know, you just wait for the break, wait for price to take the inducement, and continue. Right? And you can repeat it from here. After you've caught it here, right? You wait for the break. Wait for the inducement again, your entry's right up here again, wait for the break, here again. I don't see an inducement here, obviously on the lower time frames there might be. Enter, right, there's another break, right, there's no inducements in here, everything is just sideways now. Remember, this is sideways, it won't work on a sideways market. There's a break there again, right, look at the high, which is right here, cause the break, there's your inducement, above it will be your entry again. Right, there's your entry. Right, pretty straightforward here, I must say. Right, one more last one here. There's your break. Right, notice that's a wick. That will be the inducement. So we can cover this whole entire area. Right, We can look at from here. That's your inducement right there, right, and enter. Boom. Right. That's it, guys. Hope you guys learned. Hope you guys understood what it is and how the strategy works. It's pretty straightforward again, and please leave me a comment and a like on this video. It definitely helps the channel get more views, and you know, gets me to continue creating more videos like this for you guys for the future. All right, so enjoy. I'll talk to you guys and see you guys next time.